Yesterday, AMD rallied 4.91%, Nvidia rallied 2.19. Now, guess which one reports earnings this afternoon? It's Nvidia. Nvidia reports today around 4:20 Eastern, and yesterday the market bid up its competitor more than twice as hard. That's not a mistake, and it's not noise. That's traders buying the read-through without buying the risk. They want exposure to a good Nvidia number without having to survive the Nvidia reaction. Hold on to that because it tells you exactly how the professionals are positioned going into tonight. Four things, fast, because we're on the clock. What's actually expected tonight? What the chart did over the last 2 days and why that question is now closed. The reason Nvidia can beat and still get cut. That's the most useful idea in this video. And 3 price levels for after the print. No prediction. I don't know what the number is, and neither does anyone else talking to you today. What I have is the setup. Quarter ended July 26th. Management guided to roughly $91 billion in revenue. Consensus drifted above that to about 92.2. The street wants $2.09 in earnings per share. Same quarter last year, $1.04. That's a double year over year at a $5.2 trillion market cap. Companies that size are not supposed to be able to do that. Graphic, $1.04 to $2.09 plus 101% Y/Y. Now here's the thing that got better overnight, and it's the reason for that cold open. Nvidia trades at about 32.6 times trailing earnings. Broadcom, 61. AMD, 123. AMD's rally yesterday pushed its multiple up toward 123, while Nvidia sits in the low 30s. The gap didn't close going into this print. It got wider. The biggest company, the fastest grower, the one everybody calls overvalued, still the cheapest name in its own group, and by more than it was on Monday. Now the setup, and this changed in a real way over 2 sessions. Monday, Nvidia traded down to 207.25. That is below its 50-day moving average, which sits at 207.81. It broke the line intraday and then closed back above it at 208.48 on 135 million shares against 100 million average. Then yesterday it gapped up, ran to 214.73 and closed at 213.05, up 2.19% on 122 million shares, also heavy. So put those 2 days together. The line got tested, it got defended, and then it got bought. Both times on above average volume. That's not drift, that's a decision. Where that leaves us this morning, $5.24 above the 50-day, 200-day down at 195.43. RSI recovered from 44.6 on Monday to 49.6, right at the midline, momentum neutral, which means the technical question is closed. The chart voted. Everything from here is the guide. This is the part I want you to remember. So if you take one thing from this video, take this. Nvidia has beaten earnings 6 quarters in a row. And look at the last 4 beats, 6.1%, 6.6, 8.0, 6.3. That's not a streak, that's a schedule. So run the math the way the market runs it. Take the average, a little under 7%, apply it to the 209 consensus, and you land around 223. 209 is the published number, 223 is the expected one. The market trades the second one. That gap has a name, the whisper number. Consensus is what analysts print. The whisper is what the tape actually carries. After 6 identical beats, the tape stopped believing the printed number a long time ago. So picture 5 o'clock tonight. Nvidia prints 215. Every headline on your phone says Nvidia beat consensus by 3%. And the stock is red because the tape wanted 223 and got 215, which against real expectations is a miss. Don't take my word for it. This happened last week. Coherent posted record revenue and raised guidance. Next day, down 12.8%. Nothing was wrong with that business. It beat the number and missed the expectation. Same mechanism, 4 trading days ago. So when somebody in the comments tonight says, it beat and it still dropped, the market makes no sense, it made perfect sense. They were reading the wrong number. If the beat is priced, what actually moves it tonight? The guide. One word, Rubin. Blackwell is the current platform. It scaled from about $86 billion last year to an expected $135.7 billion this year. And consensus models have Blackwell revenue dropping hard next year as Rubin takes over. That decline is supposed to happen. That's what a platform handoff looks like. Old product winds down, new one ramps. Nvidia has done this repeatedly. The risk isn't the decline. The risk is management saying anything on that 5 o'clock call that makes the handoff sound later, bumpier, or more expensive on margins than the models assume. That's the trade. That's the whole trade. Second thing to listen for, gross margin language. Framed as a product cycle, that's normal. Framed as a margin event, That's a different sentence, and the stock will treat it differently, and one nobody's watching. Nvidia is backing roughly $105 billion of financing for an OpenAI data center in Ohio. The biggest chip supplier is now also the ecosystem's lender. Real growth accelerant and a real risk worth naming. When your customer buys your chips with money you helped arrange, some of your revenue is self-funded. Fine while it grows, ugly if it stops. 3 scenarios, measured from yesterday's 213.05 close. Levels, not vibes. Bull, around 260, roughly 22% up. Needs a beat and a raise plus clean Rubin commentary. That clears the 52-week high of 236.54 from May, which is now only 9.9% away. Base, around 225, about 5.5%. Beat lands in the usual band, guide is fine, and it works back to the shelf it traded on in mid-August. Most likely outcome, bear, around 195, about 8.5% down. Guide light or margin talk cautious. The 50-day breaks, and the 200-day at 195.43 becomes the magnet. Notice the bear case got bigger as the stock rallied. That's not a coincidence. It's the first hint of the next section. Because here's what almost nobody will tell you today. The 2-day bounce made the setup worse for anyone buying it now, and I can show you exactly how. The 14-day ATR on Nvidia is $6.40. A normal Nvidia day is about plus or minus 3%. My stop sits 2.5 ATRs from entry, $16. On Monday's close of 208.48, that puts your stop at 192.45, comfortably below the 200-day. Good place for it. On yesterday's close of 213.05, the same rule puts your stop at 197.05, which is now above the 200-day at 195.43. Read what just happened. 2 days of rally moved your stop from safely below major support to sitting right in the noise. Same rule, same stock, worse position, purely because you're paying more. That is the actual cost of chasing, and it never shows up in the excitement. A stop is an order, not a guarantee. And the harder truth on top of it, an earnings gap doesn't respect your stop at all. A stop says sell when price touches a level. If it closes at 213 and opens at 185, your stop doesn't fire at 197. It fires at 185 or wherever the first print lands. You don't get the price you asked for. You get the price that exists. So if you're carrying this through tonight, size it so the gap is survivable, not so the stop is comfortable. 2 different calculations, and only one of them applies after 4 o'clock. And the thing nobody wants to hear on earnings day, you do not have to have a position on. There is no rule that says you must be in the seat at 420. If the guide is good, there will be time to own it higher with less uncertainty attached. If the guide is bad, you'll get the price you actually wanted. Neither outcome requires you to gamble this afternoon. So where does this land? Valuation argument is real, and it got stronger overnight. 32.6 times for the fastest grower in the group against 61 and 123 for the 2 names behind it. Chart is neutral and the question is closed. It tested the 50-day, held it, bought it back on heavy volume, RSI back at the midline. The risk isn't the business and it isn't the price. It's that 6 straight beats move the bar to a place the printed consensus doesn't describe anymore. And that gap gets settled at 5 o'clock tonight on the call, not in the press release at 420. My read. Own Nvidia for the platform, not for tonight. Those are 2 completely different decisions and people blur them constantly, usually about 4 hours before a print. Full report with every level, the comps and the risk register is linked below. Subscribe because I'm covering the reaction tomorrow morning with the actual number, and that video will make a lot more sense if you watch this one. Comment and tell me, holding through or standing aside? I read them. This is education, not advice. Nothing here is tailored to your account. Trading involves risk of loss. 420 this afternoon, then the call at 5. Process over prediction, especially on the loud days. I'll see you tomorrow with the number.